Dear friends, I think it is better to introduce ourselves before commencement of this section. My name is Tyagaraja Babu. I am working as Deputy Commissioner, Thiruvananthapuram.
I am Biju Thomas. I am Deputy Commissioner Air Cargo, Cochin.
My name is Johannes George. I am Deputy Commissioner, Central Excise Headquarters, Trivandrum.
I am Praveen Chandra, Joint Commissioner, Audit Commissionerate, Cochin.
My name is Krishnan. I am a Deputy Commissioner, presently working in Cochin Headquarters.
Muhammad Bashir Rich, Assistant Commissioner, Commercial Taxes, retired.
I am Biju Kumari, Joint Commissioner, Audit and Inspection.
Dr. Ramalingam from Gulati Institute of Finance and Taxation, working as an associate professor there.
I am Rajit Krishnan, working as Commercial Tax Officer, Kayangur.
I am Sunil, working as Commercial Tax Officer in the Data Mining Wing.
I am Shishan, Intelligence Officer, Trivandrum.
I am Manu, Commercial Tax Officer working in Commissionerate.
I am Ajit, Commercial Tax Officer, Pathanamthitta District.
I am R. Sri Kumar, retired Deputy Commissioner.
I am Jacob T. Koshi, retired Deputy Commissioner, Incidence, Ernakulam.
I am Varsala Devi, retired Deputy Commissioner.
Shobana Devi, retired Deputy Commissioner.
I am Rameshan Kolikara, Intelligence Officer, Kasarkod.
I am Vincent, Intelligence Officer, Wayanad.
I am Mushtaq Ali, Commercial Tax Officer.
I am Muralidharan, Deputy Commissioner, retired.
I am Satyanarayanan, retired Assistant Commissioner, Sales Tax Department.
I am Jayakumar, Assistant Commissioner, GST Cell, Kerala.
I am Ashoka Narayanan, Superintendent, Central Excise, Thiruvananthapuram.
I am S. Suresh, Superintendent, Central Excise Headquarters, Trivandrum.
I am S. Suresh, Superintendent, Central Excise, Cochin.
I am Benny P. Jacob, Superintendent Systems, Headquarters, Cochin.
I am Thomas P.A., Superintendent of Central Excise at Cochin.
I am Joey Joseph, Commercial Tax Officer, Ettumanur.
I am K. Kabalan, Commercial Tax Officer, Pondicherry.
I am Nettigadan Antonio, Superintendent, Cochin Commissionerate.
P. Devarajan, Commercial Tax Officer, Commercial Taxes Department, Government of Puducherry.
I am Srinivasan, Deputy Commercial Tax Officer from the Union Territory of Puducherry.
I am Satish Kumar, Assistant Commercial Tax Officer from Puducherry.
I am Saravana Kumar, CTO Headquarters, Pondicherry.
I am Muhammad Ashraf, Assistant Commissioner, Kerala Commercial Taxes, Kannur.
I am Pramod KP, Assistant Commissioner, Cochin.
I am Mahesh Kumar, Assistant Director, Nason, Cochin.
I am Biju K. Jacob, Superintendent of Central Excise, Thrissur.
P. Makara, Assistant Commissioner, Idiki.
I am Mr. Prabhakaran Levy, Inspecting Assistant Commissioner, Kasarkod District.
My name is Saju Nambadan. I am working as Assistant Commissioner Law, Commercial Taxes, Ernakulam.
Raghunathan VG, Assistant Commissioner, Intelligence, Ernakulam.
I am Shaini, Deputy Commissioner, Matanji.
I am Sajia Miranda, CTD Kerala, Assistant Commissioner.
I am Firoz Katil, Assistant Commissioner, Commercial Taxes, Kozhikode.
I am Sajeevan, retired Deputy Commissioner, Commercial Tax. I am Prashant Gopal, Inspecting Assistant Commissioner, Intelligence, Kottayam.
I am Anil Kumar, Assistant Commissioner, Economic Intelligence Wing, Taxes.
This is our presentation plan today. We all are very elder officers and very experienced officers, and kindly raise any questions or any doubts at any point of time in our discussion. And that okay, our presentation plan is like this: just an introduction, and just then we look into the power to levy tax, then the incidence of tax, the liability of being tax, and composition, exemption from, and the remission of tax on supplies from division in quantity. We discuss relations between central and state are tightly compartmentalized in the current scenario, and as we all know, center is levying tax on some of the items and state is levying tax on some of the items, and the interdependence is highly demarcated under constitution itself. Center levies tax on manufacturing, services, etc., and state levies tax on sale of goods, luxury tax, etc. And there sometimes it causes cascading effect. The consumer itself is bearing that burden, and there is no reason for getting the credit and at every point of value addition, and in that case situation the traders or manufacturers are also at loss. And so introducing this GST in that sense is very revolutionary in the fiscal scenario in India. And the introduction needs so much changes in constitution itself, and that necessitated the 122nd amendment, as you all know. And on 22nd amendment brought new articles in the constitution, and article 366 clause 12a defines the GST as a tax on supply of goods or services, or on both, except tax on sale of alcoholic liquor for human consumption. The GST itself has its constitutional validity. and the new sections 246A, 269A and 279A also introduced in the Constitution give rise to the procedure or execution of this GST Act. 246A, we can look into it, give the power to Parliament and legislature to legislate the GST for the execution of this GST, and 269A allows Parliament to legislate on integrated GST Act, and 279A is to constitute the GST Council, who is having a coordinating role for this execution of this GST. And when we look into this 246A, 246A itself says that Parliament and simultaneously the states have power to make laws on goods and services tax to be imposed by Parliament as well as states. So Parliament can make a law to create a CGST Act, and every states have to make the SGST laws be there. CGST plus SGST. And this 246A subclause 2 but specifically states that in the case of supply involving interstate transfer of goods and the power to make laws. So state is having no power. And the revolutionary change is that it gives simultaneous power to Parliament and state legislature. That means Parliament is getting power to legislate on a transaction which is happening on intrastate also. CGST, we can look into the next part. CGST and SGST simultaneously imposed on every intrastate transaction, and exclusive powers with Parliament to make laws for imposition of IGST on intrastate transaction. Then we go to the incidence of tax. It is a cardinal part in every tax administration that it determines the point at which tax is to be levied, or that means that the incident, we look at this is the basis of levying of tax, the foundation stone and the point at which tax is to be levied, and it is the taxable event. We all know that the taxable event in the value under tax, it is the supply of goods and services, and the incidence of tax in excise tax, we all know that it's the manufacturing and they follow an origin-based taxation system. And in service tax, it is the provision of services. Likewise, in the GST, comprising of this SGST and IGST system, it is the supply of goods and services that is the incidence of tax. That is the point of taxation, and that is the incident that causes this taxation. Supply of goods and services, I think you might have a very good discussion yesterday with regarding to that aspect, and we may not go into that aspect. Supply of goods and services as such has not been defined in our model GST law, and supply has been defined, and it is very wider in, say, the concept of sale, etc. And Section 7 is the operating part in CGST and SGST law. Section 7 clearly states that, Section 7.1 clearly states that CGST or SGST will be levied on all intrastate supply of goods and services at the rate mentioned in the schedule and to be operated with rules. And is the intrastate. The intrastate supply of goods and services merely mean that the place of supply and the place of supplier is in the same state. That is we patently understand that. That is the only aspect, and the important thing that Parliament is getting power to legislate, or Parliament is getting power to levy over the transaction involving within the state. And the rules to be, rates to be specified in the schedule, and discussion on rates is still going on and it will be in due course we may understand that and schedule. After getting these orders passed in state legislatures and parliament, we get to understand about the rates, and simultaneously rules may be passed in, rules may be prescribed in states and parliament, and manner of collection will be prescribed. And then this is the same case with integrated GST also. In integrated GST, like this SGST system, section 4 is the operating section, and section 4.1 says the same. IGST shall be levied on offences which take place in the course of interstate trade or commerce. And another important thing is we have to look into is section 7.3. The same is in the IGST Act, that is section 4 subclause 3. That deals with a new concept, that is reverse charge. That means the taxes levied to, the section reads, tax to be levied in a specific category of goods, supply of goods or services, which has to be notified by central or state governments on the recommendation of the GST Council, where the levy will be upon the receiver of goods or services. That is the reverse charge mechanism. That reverse charge mechanism means the liability is upon the receiver of supply of goods or services instead of the liability is upon the supplier of goods. So, but that reverse tax is not a new thing to the central excise or who is administering on service tax. It is already there, because in section 4 empowers central government to notify certain categories to be in this category of reverse tax applicable. The reverse tax is applicable. And for example, reverse tax, one thing in the current scenario, one example for the reverse tax is that the insurance agent service. There are certain categories provided in the notification: insurance agent service, rent a cab service, security providing service, etc. And in the case of an insurance agent provide the service by gathering clients, and the person getting the benefit is the insurance company, and the insurance company has to remit service charge on behalf of the service of this insurance agent. That is I am citing just one example, and that is the crux of this mechanism, and that brought into the GST Act itself. And tax to be levied on specific categories of supply of goods and services on reverse charge basis. But the importance is that we cannot apply reverse charge merely logically, but we have to get a note from GST Council, and government, center or state government has to notify that on services reverse charge should be applicable. Such categories to be notified by the central state government on the recommendation of the GST Council. Reverse charge means the liability to pay tax by the person receiving goods or services instead of person supplying. The section 285 of this model GST Act itself. The same, this with regard to the IGST Act, we have already discussed. The IGST Act section 4 is same as of this section 7 of the common, the CGST SGST Act, but one difference is that the CGST Act, SGST Act is applicable to intrastate transfer, and it is interstate. That is only difference. The same reverse tax mechanism, reverse charge mechanism is applicable in IGST also. In section 4.3 of the IGST Act is same as 7.3 of the SGST CGST Act. Then the next question is who the taxable person is. Section 7.2 clearly says that every taxable person shall pay SGST or CGST and its rates prescribed according to law. And IGST also, section 4 subclause 2 also says that taxable person must pay IGST. So the question will be there, who is the taxable person, on whom the levies will be applied, and who has the liability to remit these taxes. Then we can look into section 2 subclause 9.6 of this model GST law. Section 2 subclause 9.6 says the definition, merely saying that we can look into the meaning at section 9 of this act. Taxable person shall have the meaning as assigned to it in section 9 of that. So in section 2 subclause 9(6) just elaborated the meaning to section 9. Section 9 says that a person who carries on business at any place in India who is registered or required to be registered under Schedule 3 of this Act. So, Section 9 clearly says that the person who is having registration is the taxable person. And in our model GST law, the every provision with regarding registration is described in Schedule 3. But there is another question, whether all the persons who are registered get into the category of taxable person. In order to get the answer, we have to look into the registration provision. I am not having this slide. Next class is about registration, and the officer will clearly say but I can roughly say about the registration category. Schedule 3, para 1 clearly says the criteria for registration. That says that any person whose aggregate turnover in India is above 9 lakhs has to take. And in the case of Northeast including Sikkim, it is 4 lakhs. And then the question, what is the aggregate turnover? It is the aggregate value of supply of goods and services, including exempted supply of goods and services plus any export done by the person, and that will not be the turnover which any person is levying tax on reverse charge basis will not be taken for the calculation of aggregate turnover. So any person whose aggregate turnover and any person whose aggregate turnover is above 9 lakhs who is having the same PAN, and the aggregate turnover is calculated on the basis of all over India operation, is above 9 lakhs to take registration. In the case of Northeast and Sikkim, it is 4 lakhs. And there is a very much importance that it is the aggregate turnover of a person having same PAN. So the person having same PAN may have multiple registration in every states, and he might have a separate registration for its verticals. He may have a business on different categories of supply of goods or services. He can take registration on verticals, and that also in the state. But whole total, the aggregate turnover anyway all over India must, if crossed 9 lakhs above, he has to take registration. And but the question still there remains whether those person who has been above this threshold of 9 lakhs or 4 lakhs becoming a taxable person. But the answer is there, no, it will not be possible. Section 9, proviso to section 9 clearly provides, that is not written in this slide, the proviso to section 9 clearly states that any threshold which is over 10 lakhs annual, when gross annual turnover becomes 10 lakhs, that person become taxable person. Threshold in northeastern states, it becomes 5 lakhs, that person become taxable person. So any person having registration but the threshold is below 10 lakhs and above 9 lakhs will not be a taxable person, and any person having registration, their threshold is above 4 lakhs and below 5 lakhs is not considered as taxable person in this case. But in registration case, we have another thing. In addition to this threshold, there are certain categories of person who has to take the registration mandatorily. Person who is having interstate supply of goods or services has to take registration mandatorily, or any casual taxable person. Any person who is having supply of goods and services who occasionally conducts business, that is a casual taxable person. Non-resident taxable person, non-resident casual taxable person that occasionally conducts business, but the ownership is in outside India. For example, one who is providing service as a consultant for designing a high-profile building or something like that, and the consultant come from foreign countries, and after consultancy he will come under non-resident taxable person. This category has to take registration irrespective of threshold. Then another is input service distributor, that also has to take registration irrespective of this threshold. Input service distributor may be a new term for our service officers, but it may be a clear, very popular term among central excise or service tax. Input service distributor merely means that, as described in Model GST Law Section 2 Subclause 56. That means any manufacturer or service provider who avails services from somebody and transfer the credit of that services to in its branches. That example, I can tell that an input tax distributor, Bata company is having its manufacturing units in Calcutta or Hyderabad. It is having its corporate offices in Delhi. And Delhi, they entrust an advertising agency for having advertisement on electronic media or in print media. And this advertisement agency conducts the advertisement campaign. After conducting this campaign, the agency supplies invoices to this Bata company and at its headquarters, because headquarters is having contract with the advertisement company. Then this Bata company can issue invoice under Section 9 of CENVAT Credit Rules 2004 and can transfer that service tax credit to its manufacturing units, provided that this Bata company's headquarters at Delhi has to take registration as input tax distributor as an independent registration. So this is the current scenario. In GST scenario also, this will also replicate. The input tax distributor as a concept as happening in service sector and a central excise. The importance in the current scenario is that for paying the tax on service tax sector, he also can get credited with the central excise tax. That is its importance. And this also will taken into GST, and GST it is very liberal considering the present scenario, and it will have very vast ramifications in the future also. And it will maybe a bone of contention in the future course of execution of this GST law. That much relevance it is having, because so much services is interesting, audit service, advertisements, not only advertisement service, etc. They can get credit in this production unit. I am not telling about registration, but it is these kind of persons has to take registration irrespective of turnover and will be taxable person under our definition. And apart from input tax distributor, a person having a person liable to pay this reverse charge is also liable to take registration irrespective of this threshold. Then this electronic commerce companies has to take registration mandatory irrespective of turnover. Then persons who are mandatorily liable to remit TDS under Section 37 of the Model GST law. That is mainly government departments, etc. They also have to take registration mandatorily. And business aggregators, they have also taken registration mandatorily. Business aggregators means a new term, but it is regarding the service providers on electronic platform. Service providers on electronic platform mean, you know, the taxis operators like Ola, Uber, that kind of persons is legally termed as business aggregators. So have to take registration irrespective of turnover, and they also will come under the term taxable person. And government again, under Schedule 3 of this GST Act, government can take any person in the taxable person, or any person has to take registration irrespective of threshold. So the taxable person is a concept. This person has to take registration mandatorily, and the person whose annual turnover becomes 10 then becoming taxable person, and 5 lakhs in northeastern states. But in this concept of taxable persons, there are exemptions also. In section 9 itself provides the exception that an agriculturist shall not be considered as a taxable person, proviso to section 9(1). So then the question, who is an agriculturist? Agriculturist is defined in our model law, that section 2(8) of the model law defines an agriculturist. Agriculturist is a person who cultivates personally for the purpose of agriculture. Then the definition also stresses on another definition. 2 subclause 7 of the Act defines agriculture. Agriculture is the same it is the same definition as we see in VAT Act. Or grammatical variations means horticulture, sericulture, etc., raising of crops in that category, but not include dairy farming, poultry farming, and cutting of woods, cutting of grass, etc., raising man-made forest, etc. These are outside the purview of agriculture. That means poultry farming, stock breeding, this dairy farming will not get the protection as exempted as in agriculturist. So any person involving within the service network with dairy farming, poultry farming, stock breeding, etc. will be taxable person under GST. Then we have discussed Schedule 3, that is regarding the registration, and no threshold applicable for casual taxable person, input tax distributor, and non-resident dealers. Other categories person to be registered. In the taxable person category, central government, state government, and local authority has been brought in, and it will be regarded as a taxable person when they involve with activities or transactions in which they are engaged in the capacity as public authorities other than activities or transactions are specified in Schedule 4 of this Act. Whenever government or government agencies involved with activities or transactions as public authorities, they will be considered as taxable person. But as we know today, government is having so much duties as a sovereign authority, and whether that may come under the purview of taxable person. But that will not be the case, because Schedule 4, if you look into it, is very elaborate and covers almost all sovereign duties of government or sovereign functions of government, and it will not, for doing that kind of functions, the government will not come under the purview of taxable person. If you go through that schedule, you can see that any service done by government to another government will not be taken for a taxation purpose, or government's duties to or government service to common people like issuing passport, birth certificate, etc., birth certificate, death certificate, etc. Government cannot be taken as taxable person, or government's other duties under Municipalities Act or Panchayat Raj Act, they cannot come under cannot come under taxable person. And governments, whenever government providing service as part of health service or education, it will also be protected. And government's sovereign duties related to international relations, international trade, etc., and these consular services, immigration, etc., government's activities will be protected. And more than that, every activity for regulating the public order and government will be protected. That schedule is a very vast schedule. And so apart from that sort of things, the state or central government local authority shall be regarded as taxable person under GST. We will go to the next thing, the composition of levy. It is an alternate method of taxation for small-scale taxpayers. Small-scale taxpayers means the aggregate turnover of a taxable person is below 50 lakhs. The proper officer, the assessing authority or officer from central GST or state GST can allow with the permission, allow these persons to levy, to opt for composition of levy. The levy, they cannot claim input tax credit or anything, and they cannot collect the tax, and the levy will be will not be lower than 1%. and the higher rate has not decided, but the levy, so far it is decided that the levy must not be below 1%. But there are some restrictions also. Any taxable person having transactions on interstate supply of goods and services cannot opt for this composition of levy. Another thing is that the proper officer of central state government recommendation of GST Council may permit a registered taxable person to avail this facility. And there also you can see that proper officer of CGST or SGST on recommendation of GST Council. GST Council is everywhere. The aggregate turnover in a financial year should not exceed 50 lakh rupees. The taxable person would have to pay an amount prescribed as not less than 1%. Such a taxable person shall not collect any tax from the consumer. Such taxable person shall not be entitled to get any credit of input tax. And no such permission shall be granted to a taxable person who effects any interstate supplies of goods or services. But we know that this kind of the same kind of philosophy is applicable in a provision, a presumptive tax provision in VAT Act. But the main difference is that here only any person who effects interstate supply of goods and services cannot opt the permission. But that means any person who can import the services or can conduct the export of goods or services, that may be permitted. And another restriction is that no such permission shall be granted to a taxable person unless all the registered taxable person having same PAN as held by the taxable person also opted to pay tax under the provision of this subsection. This provision means section 8 subclause 1 says that in the case of registration, a person having a same PAN having aggregate turnover may be less than 50 lakhs. And he may have multiple registration. He may have registration in different states in Tamil Nadu, Rajasthan, or in Kerala. Or in Kerala itself, he may have a registration in different business verticals. If he has a registration in home appliances or in dress materials. But whenever they opt for composition, all these registrable person has to opt for compounding. Otherwise, the proper officer will not permit the compounding. And if the proper officer on any occasion came to understand that the person is not eligible for this composition scheme, that his turnover is above 50 lakhs, he can give a penalty on which how much tax he has to pay. And a show cause notice would have to be served on the person, and a reasonable opportunity should be provided. Another sector is section 10 is regarding power to grant exemption from tax. When we look into this section, section 10(1) says that central government or state government can grant exemption on the recommendation of GST Council and by notification give a general exemption to any category of supply of goods or services. And the main point is that it is only on the basis of recommendation of GST Council, and there is public interest also will be there. And a notification for issuing a general exemption, a notification is needed. And the government's power to exemption can be exercised in two ways. One is by issuing a notification under section 10 subclause 1. No. State government with the recommendation of GST Council only. Yeah, it can be notified. It can be notified with the recommendation of the GST Council. That is the meaning we get from this law. But practically that is no, that is not committed. But giving an exemption to a particular state, that will also cause problems. As he asked, because the CGST and SGST is applying simultaneously on any category of supply of goods and services. So any exemption, it will be applicable to SGST and CGST as well. And it is any exemption, if a state provides, it is applicable to center also. Yeah. Yeah, that's correct. Yeah, yeah. Because CGST and SGST go simultaneously. That is correct. And general exemption, but the crucial thing you have to look into is that only with the recommendation of GST Council, any exemption can be provided. Without the concurrence of GST Council, nothing can be done in under section 10, that is general exemption, or under section 2 special exemptions. In the case of general exemptions, government can give exemption by a notification on the recommendation of general GST Council. In the case of special exemption, the government can issue a special order on the recommendation of the GST Council on a particular category of supply of goods or services. But even though this section 10, when we issue general exemptions, it may be absolute exemptions or maybe with conditions also. But in the notification itself, government has to state that whether it is with the conditionalities or it is a pure absolute exemption. So the first one under section 10, it is notification, and under the section, the next category under section 2, it is the special order. And on the recommendation of GST Council in public interest is also there in under section 10.1 and 10.2. Special order under circumstances, in general exemptions, and coming to special exemptions, the special order must be of an exception on the basis of an exceptional circumstances, on the basis of circumstances of an exceptional nature. Exceptional nature to be stated in such order. But government, but some relief is provided in the government. Whenever there is a special order is issued, there will be questions as to on what prompted the government to issue such an order. So government will get 1 year time. If any, government can provide the reason for this, how they considered it as an exceptional circumstances, they can provide it in the order itself. Otherwise, they will get 1 year to notify what the special circumstances is. They can notify it in Gazette or in their website. The remission of tax on supplies found deficient in quantity. The recommendation of the GST Council. Yeah. It is not binding on the state of government. Yeah, it is. While we always say that it is just advisory in nature. But we have to understand that the GST Council is formed with a constitutional mandate. Article 279 has created the GST Council. So it has some, it is actually a constitutional body. It is not merely created by an executive order. So as a constitutional body, every state government or central government has to obey. That is why it's otherwise government can create a GST Council with an executive order. For creating an empowered committee, there is an executive order. So it is on par with Public Service Commission or something like that, which is constitutionally protected. So we cannot merely say that it is advisory in nature. But in statute, every wording you can see that on recommendation of the GST Council. So we cannot clearly deny that it's only having an advisory role. But on reading it, we can understand that GST Council will have a power. That may be happening inside the GST Council, but their recommendation is necessary. The central or state government cannot make. The importance is that usually we see that the exemptions are provided by central or state government in budgets, annual financial statements. That freedom will go. And this recommendation also provides the percentage or specific conditions. Yeah, that may be. And practically, that may be. Because otherwise, there could be variations. Yeah, sure. And the only thing the state government or central government can give remission of tax to decrease the rate of tax without the consultancy or recommendation of the GST Council is this remission of tax on supplies found deficient in quantity. This is the only case where the state or central government can provide a remission of tax. Otherwise, in all the cases, under the control of GST Council, the rate of tax cannot be decided.
One question. This is academic interest. For example, a particular state
the recommendation of the council or without removing the cases before the state legislature. And the majority of the amendments recommended there, the recommendation of the council should be removed from the state act. What is the legal standing? For example, Kerala did. What is the legal standing?
But sir, as per my understanding, the legal standing that we have to understand that the GST Council is also a constitutional body. Legislature is okay, legislature can decide, but they are also a constitutional body.
Whether the state say that it affects the sovereignty of the state, so we are removing that. No, okay, can we give this video? Whether it is allowed. Yeah.
Yeah, yeah.
No, that bill is.
No.
What I'm saying that while presenting the bill, majority of the MLAs or whatever may be, the bill is passed after removing the wording wherever it is applicable. It is only an academic understanding. You are also
But sir, we have to see that on 22nd Amendment bill, which passed on both Lok Sabha and Rajya Sabha and need ratification of more than half of the states. And that bill, in addition to that, every state legislature have to pass this SGST Act also. After after that 2 stages, the legislative assembly, somebody or majority says that it is not. Yeah. But that is unconstitutional. That is definitely unconstitutional because GST Council is formed with a constitutional mandate. With a constitutional mandate, 279A. Otherwise, government can form with an executive order. Yeah, practically. Otherwise, why it should provided in the model GST law?
National Development Council, you may be knowing.
Yeah.
Whether it is a constitutional body or not. National Development Council is a constitutional body. It's a constitutional body. Most of the National Development Council decisions are state subject.
But sir, looking at the function of election commission. Sir, excuse me.
The purpose of constituting GST Council is only to make recommendations. It is given in 279A. See?
Yeah.
The proposed Article 279A goes for the Goods and Services Tax Council shall make recommendations to the Union and the states on the subjects are given. And in the article, it is nowhere given that it is binding on the Union or the states to adopt or accept the recommendations. Okay.
Yeah.
The proposed Article 246A, the exclusive powers are granted to the states and the center to levy tax on the supply of goods or services. And there is no rider, there is no condition that it should be on the basis of the recommendations of the GST Council, except in the proposed amendment in Article 286. Okay. So, if all the recommendations made by the GST Council are not adopted or accepted by any state, there is nothing unconstitutional. As per the present constitutional provisions, there is nothing unconstitutional. Maybe it may be between the consensus or understanding what we may call between the union and the states, we may not do it. But if you do it, or if a state deliberately does it, there is nothing in the constitution which can prevent it.
We can expect this from.
Because, see, now you may recall the situation under the 115 Constitution Amendment Act, a bill. There was a provision for a dispute resolution mechanism. which was removed later. In the 122 Constitutional Amendment also in the original form, there was no dispute resolution. It is now given that the GST Council may find out its own methods to resolve the disputes. But look at the original jurisdiction of the Supreme Court. If there is a dispute between a union and the state, it will go to no other court other than the Supreme Court. That is the original jurisdiction. If the dispute between union and the states, or between the states, or between union and the states on one side and the other states on the other side, the dispute has to be taken to the Supreme Court only. You can't amend even the Constitution because that will attract the violation of the basic structure. So we are in, these are the situations remaining. So the GST Council since beginning has been perceived only as a recommendatory body. Otherwise, it will affect the federalism which has been considered as a basic structure.
Okay. The question and answer came from the same area. The last part, section 11, it is with regarding to remission of tax. Remission of tax is the only area in which the remission of tax can be given on condition that whenever the quantity of any supply is found deficient due to any natural causes. And section 11.2 also provided that rules also to be made to fix a lower threshold of rate of tax below which the remission can't allow. And in the case of remission, the recommendation of GST Council is not needed. And our session is over. We can have a discussion if raise questions.
Things are going on, that it will affect the state autonomy and legislative office.
Yeah. On the basis of still GST is in the making, and we cannot say anything finally. Still the discussions are going on, and even the rate of tax has not fixed. So we cannot say anything other.
At the same time, there is no dispute redressal mechanism.
Yeah.
Is there any where the composite tax 1% should be remitted, whether to the state government or the CPS?
That's a good question, but the answer is not clearly mentioned in anywhere in the act. But as per my understanding, it is saying that from the starting of procurement of raw materials and up to the level of consumption on every value addition, the CGST and SGST applies simultaneously. In that sense, the composition of levy will be administered in a dual mechanism model, that CGST and SGST both have to apply. Otherwise, it is against the philosophy of this dual control mechanism.
It is not recommended.
Yeah, it is not recommended.
Whether it should be remitted equally.
No, it is not recommended, or it's not. There is no clarity in the model GST law itself. I think whenever some legislatures or parliament pass law, we may get clarity. It is not less than 1%. But there is a wording in that section, that composition of levy, that proper officer of SGST or CGST. So we cannot clearly say that they have to remit it on. In interstate supply. But even though there is interstate supply, if no interstate supply, CGST and SGST simultaneously
Okay, so
apply.
another question. So under what are the situation government becomes a taxable person?
Government becomes a taxable person.
Schedule 4 says what are the functions the government has acted upon.
Yeah.
Then what is the situation the government becomes
regarding
a
government,
person?
section 9, the 9.2 says that whenever government involves with any transactions or activities as public authorities, government will be considered as a taxable person.
For example?
Any activities, for example, we can see that KSRTC or Air India, that is what the GST, we can see that nothing new. Everything is taken in the present context, assimilation of the
So
present.
another question. That is only with the permission of the GST council, the composition of the tax can be allowed. So is it possible for the GST council to act upon all these questions?
That
all
is
these applications
the
of 35?
practicality. I am not able to say anything because still it is not a final thing. We are just discussing the concept, and on the role of GST council, we have to see it on the practical after the rollout.
In that sense, actually it is only applicable under the SGST.
Sir, can you once again repeat once again?
Actually, the dealers who are eligible for compounding under the Section 8, it is possible only the dealers who are not affected the interstate purchase or the interstate supply.
Interstate supply.
Interstate supply. In that sense, actually it is possible under the SGST. We can infer that now.
Yeah.
Okay.
Yeah, we can definitely foresee that it may be under SGST. But the wording in the section says that proper officer of
Otherwise, it can be
CGST.
apportioned 50-50.
Yeah, that is we think. Otherwise, there is a term that proper officer of SGST, CGST. They can clearly say that proper officer of SGST.
I want to ask one question in the aggregate turnover. That now the threshold limit is 10 lakhs for the taxable event.
Taxable event.
But what are the turnover comprises? It is the turnover of the goods which are under the goods not comes under the purview of CGST. Some other goods there.
Yeah, there is.
It is also included in the turnover.
In computing aggregate turnover. If a
turnover,
person,
while calculating the threshold limit.
Yeah, by calculating threshold limit, if the taxable person is having business only of the exempted items, exempted supply, he will be outside the purview of this turnover. But if this person is having a transaction on taxable supply of goods or services along with any non-taxable supply of services, that will also taken for taking.
I want to know the deciding event, the tax event there.
Tax event.
Actually, the threshold limit is 10 lakhs. Below that, there is no taxable limit. But I want to know that actually, while we calculating the total turnover there, the goods, the same dealer involving the business of goods outside the purview of GST.
Yeah.
At that event, how can it possible to calculate whether it is included in the turnover or outside the purview of the turnover?
No, it's not outside the purview of turnover.
Everything is comprised in the
in aggregate turnover counting. There are two things. A taxable person may have transaction in exempted supply of service or goods only. He will be totally outside the purview of this taxable. But a person is having taxable supply of goods or services plus non-taxable supply of goods or services. That non-taxable will be also taken for considering this aggregate turnover. For example, a person having transaction only for petrol and diesel, he will be outside the purview. But a person having other transactions plus this petrol transfer, that will also be calculated for this taking this aggregate turnover.
Same procedure in the VAT too.
Yeah, same procedure. Not same procedure, but
some 20% or 22% or 24% maybe. It is not correctly
finalized.
But when the sale is effected in the state, the output is collected and the output comprises SGST and CGST. My doubt is whether in this 24 or 22 the percentage actually determined by the government, whether it is ascertainable the CGST is this much percentage and SGST is this much percent, 10 plus 10 or 8 plus 12 or 9 plus 11, etc. Then only this CGST and the SGST can be separately bifurcated and corresponding IPT can be bifurcated, then only the actual net tax payability can be ascertained. Is there any stipulation that the CGST will be 10%, out of the 20, 10 plus 10? Is there any formula around in
No. This is still in discussion stage, sir. We cannot at present we can say anything about the apportionment or rate of tax between SGST and CGST.
You are mentioning the reversal of charges.
Reverse charge.
See, regarding the sale tax or VAT, it is a tax on sale or purchase. And service tax also there is a reversal. When you talk about a supply, whether the reversal of tax can be applicable on the goods also. It can be applicable, I don't know about whether services, it can be there. When you redefine the word from sale or purchase to supply, from service tax, whatever earlier thing to a supply, whether reversal of tax, that is, we can, the recipient of a particular goods tax can be collected. That is a question.
Sir, from this question, the word used in section 7.3 of the model GST law is, it says it is applicable to services and goods. Same way, the wording is like this, services and goods. But in practical sense,
The question is, we have defined the supply. Whether within the ambit of the supply, can the levy be made on the particular person, on the recipient of goods? I'm talking about specifically on goods. About the services, the central government officials may say.
yeah, but there is, logically we cannot apply. In the section itself, it says that on recommendation of the GST Council, government has to notify.
The thing is, the proposed Article 246A says that whenever there is an interstate supply of goods, or rather the union and the state government shall simultaneously levy GST. No, GST what I am saying. The union government can or exclusive power to levy GST on the interstate supplies, and whenever there is intrastate supplies, union and the states will simultaneously levy GST. That is 246A, that is the article giving power. Now GST is defined under clause 12A of
366.
It says that GST means tax on the supply of goods or services or both. That's the definition. It defines GST like that. Tax on the supply of goods or services or both. Except one alcoholic liquor is exempt. The definition is very clear. It is a tax on the supply and supply only. It's a tax on the supply and supply only. Can it be shifted to receipt? Can this incidence or event of levy, that is the supply of goods, can it be shifted to a recipient? Can it, the liability be interpreted as tax on the supply or receipt of goods or services? See, our entry 54 in list 2 says that tax on the sale or purchase of goods. So sale or purchase. If you go to 92A, union list, CST, it is a tax on the sale or purchase. It's very clear. Here only the supply is the event of tax. Can we shift it to, or can we construe it as something or an event or an activity whereby the goods or services are received? If not, now the thing is, service tax, it is entry 97 of union list, is a residuary entry. So wide, there is no provision. Just one second. One second, let me just. Entry 97 and read with Article 248, it grants power exclusively. There is no limitation, there is nothing prevents. Now my question is, see this.
There is
see,
one second.
I have no.
Can I explain?
I have no answer. I want to just put it for your discussion. The thing is, see, service tax is levied on residuary entry in the Constitution. That is entry 97. There is no prevention. There is no restriction.
The thing is that you are confusing between the incidence of tax and the taxable person. The problem is that, for example, let us say sale tax. There is a seller, there is a buyer, and the process incidence of tax is on the seller. That poor person performs the sales, takes the consideration, and from that consideration sale tax is being paid. Now what is being done is that in statute itself we are saying that this person who is the seller, he has to pay tax. Other than, you can also say that the buyer who is giving consideration can withhold a portion and he can pay tax. That is also possible. So this process has been explained in supply concept also. This has been followed in service tax for the last 12 years also, but the same concept is being brought into the supply, the concept of supply. So incidence of tax, the taxable event might be the process of selling or supply or provision of service, whatever be, and who has to pay this tax is explained in the who is the taxable person. So that is the way in which they envisage this thing.
My point is, see, for the legislature, either it is a parliament or the state has to draw the legislative power from the constitution. See, the legislative power, you have to draw it from the constitution.
Yes.
Okay. Now, at present, it is Article 246 and the 7th schedule and 248 for the residuary entry. Clear? 246, it very clearly gives 3 lists. List 1, 97 entries, list 2, 67, then 46 entries. And there is a residuary entry 97, which gives the power to, including the power to raise tax. That is the entry 97. So both the union and the states are drawing power from the constitution. They have made so many tax laws and they have been levying. But the power draws from the, power emanates from the constitutional provision. Now let us come to the 246A. 246A is the proposed article which is going to grant power to the union and the states to levy GST. It says that union and the state shall have power to levy tax, levy GST. And GST is defined in 366. 366 always says that GST, goods and services tax, means tax on the supply of goods or services or both. What does it mean? It means whenever there is a supply of goods, tax can be levied on that supply. It is an activity. Whenever there is a supply of goods or services or both, that activity can be taxed. No other activity can be taxed.
Sir, this is the same sir, this is the same activity that is the incident of tax, but the tax burden is shifting to the person who receives the supply. That's only case. Tax burden is shifted. Sir, another thing is that in GST law, we were never say anything about receipt. We say inward supply.
See,
we say the term inward supply only.
Mr.
Not.
I did not complete my this one.
Whether the supply constitutes sale and purchase, that is
See,
no, that is not the issue.
Now let's in the original KGST Act 1963, Section 5A, you may sometimes remember, the purchase tax was there. Whenever there is a transfer of goods which is not otherwise taxed, purchase tax could be levied upon it. That is Section 5A of the old KGST Act, with which we have used the purchase tax. Some of my friends may be remembering. Why? Because we had that power. From where? Entry 54. What power? Tax on the sale or purchase of goods. That's the entry.
Okay.
Okay. Yes, let me just, I'll take only 1 or 2 minutes more. See, I'm putting a point for the discussion, that's all. Nothing. I have no, what I call, I'm not very stubborn on that point that it should not be taxed at all, but I think it's a matter to be discussed. Now coming to the present aspect, what does it say? It says tax on the supply, and supply has been defined. How it has been defined in the law? Whenever there is a
yesterday there was about supply. I think you were not here.
I was here.
So you have no doubt on yesterday.
No, I have no. Still, I don't have a doubt. Sir, I don't have a doubt.
And what's the type of delivery and all matters are very well clearly discussed. So I think you have no such doubt on yesterday.
No, I still don't have a doubt. I still don't have a doubt. I just wanted to put a subject for discussion. Whether will it? No. Just
I think everybody knows what is supply. Everybody knows what is supply.
Yeah.
And yesterday that was clearly discussed.
Yeah.
So then,
Does it include? No. Does it include a receipt? No. Does it? There is no meaning. No. See, sir. Now, question is, if that is not. See that if that doesn't withstand the judicial scrutiny, where are we going to levy it? Yeah. See, this is not a small. This is not a small thing.
Sir, kindly say that the incidence of tax is just a supply here.
Yeah.
Incidence of tax is supply.
Yeah.
And who has to remit the tax? Whether it is mandatory that the supplier has to remit tax. But this is we in the model GST law never say anything about receipt. We only say it inward supply.
My doubt is, now I have a small doubt. My doubt is now after my honorable friend has said it, my doubt is, does the supply include in itself receipt? If not, will it withstand the judicial scrutiny? If it doesn't withstand the judicial scrutiny, we will lose the tax.
In case of central excise, the taxable event is manufactured. Are we collecting central excise duty when each and every good are manufactured? No. We collect duty when it is removed from the factory, isn't it? Just a model made for easy collection of tax. Similarly, in a supply chain, there will be a supplier and a recipient. So whether the supplier should be the point at which the tax should be collected or at the recipient end, that is for the government to include it in the law.
As per the Constitution, supply in the Act, whether that supply by the has got made enough deeds to tax the recipient or not. This is the question. Yes. Whether it is X or not. Yes. Whether the supply definition has got enough deeds to tax the recipient.
What you mean to say is that since the word supply has been used, that excludes receipt.
Yeah, not excludes.
What we're implying is that since only the word supply has been used, receipt has been excluded.
Yes.
But don't you think that receipt is a consequence of supply?
The confusion with regard to the question, question is that as far as goods is concerned, till this time, we have been taxing the purchase points. We have been taxing the purchase point. As far as central excise or the central statutes are concerned, they were not at all bothered about taxing the recipient site.
No, that's not. Service tax, that is currently.
As far as the Mangalinidhi case, what happened to it? It is because there was no special provision in the constitution to levy that event. Here, the event enshrined in the constitution is only supply.
So please understand, supply is not a one-way street, it is a two-way street. And there are many points and junctions in which that forms the whole supply chain.
That is not the question at all. For every supply there is a corresponding receipt. That's not the question. That need not be answered also. That's not the question. But the incident, when the incidents are, we take the incident. As far as our water tax is concerned, 6.2, there was a provision 6.2 was imposed on the purchase. When the incident is purchased, not sale.
when such a scenario occurs in future, will it be lack of constitutional validity? That I think one of the
Sir has, Gopakumar sir has initially raised that question on the basis of constitutional definition of this. Here the incidence of tax is supply, and just shifting the tax liability burden to the other party. That is only happening. That is why in model GST law, nowhere the word receipt has been used. Always use the word inward supply. And in a case, the incident is supply, and just shifting the burden of tax-paying liability to the other. That's only happening because in many of the cases we cannot locate the person who are providing supply. In the case of somebody is providing consultancy service, we can take the taxes from the person before us. That is the mere understanding from the reading of this model GST. We may conclude the session, and I thank every senior officers, especially for cooperation.